All right. I don't know what's going on with this music. And This is me. I'm Guillaume with Rosalie here. This is Stop Losing, Start Trading. I did not update the title, but we're going to analyze the interns' portfolio today, not the founders. This is Stop Losing, Start Trading, the trading show from the Panoptic team where we go over trades, go over the markets, try to formulate a winning strategy using options. What we say is not financial advice, of course, but feel free to use this as a way to maybe guide your knowledge, get to understand a little bit how we think about options at Panoptic, and maybe try it out yourself. Always excited to hear your feedback. So yeah, without further ado, how are you doing today, Rosalie? Oh, sorry, I think I'm the one that muted you. Sorry about that.
That's okay. Hi. Yeah, I'm doing really good today. Yesterday was Bitcoin Pizza Day. So it was a really exciting day, and Bitcoin hit another all-time high.
Is it
So
you're very close to the pizza? I mean, I don't know what's a pizza now, but with that, is it always a bullish sentiment around pizza day?
yeah, usually I think the last 3 years, Pizza Day has been really fun. I know Snacks has been doing it for a lot longer, but yeah, there's parties all over the world, and I think just getting the community together kind of helps push good sentiment towards Bitcoin.
Can you, for the audience that may not be familiar about pizza day, why are we having a pizza day with Bitcoin?
Yeah, so I think I'm not sure how long ago it was, but a guy paid 10,000 bitcoins for two slices of pizza. And at the time, this was really legendary because the fact that the payment was able to be received and accepted was like a huge move. And the guy has since said too that he has so much Bitcoin, so this really didn't make a dent in terms of money. It was all about just the fact that he was able to do this transaction. And yeah, it was
I mean, at so much
awesome.
Bitcoin, 10,000 now is $1 billion.
Yeah, for two
If it's
slices of pizza or
if it's
pies.
if it's pocket change for that person, they probably have multiples of that. But as long as they did not sell all of their stash there, I'm sure they're pretty well off. But yes, the $1 billion pizza slice should have been. I'm sure it was great, but
Legendary.
so this is, and then people get together around that date, which was I guess May 22nd or yesterday, to
Yep.
celebrate that ridiculous pizza transaction.
Yeah, the Pizza DAO hosts a 24-hour live stream across all
Oh,
countries.
you have a Pizza House shirt as well.
Yes, global pizza party. Yeah.
Oh, okay. It's mirrored, but then for the left brain, can switch it up. But yeah, very cool. So there was one in Boston. I did not go, unfortunately, but I'm sure this was fun too. I love
Excellent.
pizza. At home, we eat pizzas on Thursdays typically. Uh, easy dinner for
Good.
the long weekend. Um, all right, so I hope everyone had a chance to taste the sweet pizza, or maybe taste the bull market. Let's go over the markets for a little bit. Again, CoinGecko, we can see for a while it was only Bitcoin in the green. A few others are following for sure, but it's been a good week, I guess, at least for Bitcoin, up 4.3%, and all-time high, extremely bullish. It hit, I don't know what exactly, 111,000. That's a lot. It's maybe going down, but nothing to worry about. Same thing with ETH. Also saw a little bit of a rally, being choppy over the past week, but it's in a healthy range. Definitely better than it was a few days ago, or a few weeks ago, I mean. And then this is kind of very standard. We see a huge move, and then it's stable for a while. The longer it's like a there's no winner's fallacy. If it's stable for a while, it doesn't mean it's going to be less stable soon, but it is kind of indicative that when there's a big move, either it happens right away or a few days or weeks later. But then it's been somewhat reliable that we've seen some period of stability after any type of move. Um, ETH, of course, is what we look a lot for our trading, but we have also the ETH implied volatility index. This is from our friend at Volmex. Uh, Again, volatility is doing its own thing. It seems it's a different number to look at, a different value in that specific case. Okay, let me 3 months. it moves sometimes in a way that's totally different than the price action. So what we see is that the increase in price was matched with an increase in volatility. It doesn't have to be. Typically, it's anti-correlated. So dips increase volatility, now increases. Uh, I mean, valleys also increasing volatility. This is also interesting. It's also being stable. So you see this kind of inflated, uh, maybe called uncertainty or inflated volatility that is maintained. When it starts to go down, I would say, is when you accept a turnaround or maybe another rally or another dip. But it's the nature of volatility is that it's relaxing down. It's a fear index, and the more people are looking at the market, the less fearful they are. So you see this typically going down. Again, volatility went down, then it went up when there was a rally. But you could imagine that as this was going down, you can expect that it's going to hit a point where it's going to close. So that's similar. I would not be worried about big moves either because of the exact like high volatility that there is here. Then let's look at Bitcoin. Bitcoin is definitely on the move. In that case, the volatility, hasn't spiked as much. Maybe even on the downside. So we're near the all-time dead lows of the past 3 months. If it keeps going down, it's a similar indication that maybe there's going to be another rally or dip, or it's a yeah, it's going to be what's guiding the market. So volatility, we've talked about that a few times, Rosie. But yeah, is this something that you are now looking at or paying attention to, or it's mostly the price action that you're looking?
It's usually just price action, although I find volatility very interesting as well for like meme coins and stuff. I'm just trying to profit off of volatility. But in terms of for ETH really doesn't like move as much as I would like to it to, and so I'm not really sure exactly what to do with when I look at just volatility.
Yeah, exactly. And then Solana is also they have the index. It's they all have their own little story. So it's the prices may all move in tandem, having going up, but the volatility tells a different story. So yes, I would say that the signals you see in volatility are different. Maybe you require a bit more advanced kind of experience, but overall, it's perfectly fine. I do watch the charts after the big moves, of course, but not that frequently either. It's just kind of one example. So this is fine. Maybe we'll move to the interns portfolio. Currently, we have several positions. The goal of last when we met on Monday was to de-risk a little bit. I'm just looking. Yeah, we did close a few positions. So we have markets where there's no capital. The number in parentheses is zero, meaning there's no risk utilization, it's zero. Some others have some utilization, but then and then ETH, there's another one. So we maybe will create a new position either in the BTC USDC market or the ticker Bitcoin. But for now, maybe between USDC and BTC, do you have a market that you want to look at first?
Let's look at USDC ETH first.
Okay. And this one was a reaction to the price move. You were bullish, if I recall correctly, and you thought the price was going up again, and it's in the green. You're making money for sure. Let's have a look more closely. But again, the directionality seems to be correct, so validated once again. And this is, yes, a put option. You can see from the chart, it started when the price was 24.80. Now it's 25.60. So it did go up. But yes, what do you see here on the main interface that catches your interest?
Yeah, I think I'm glad it's still in range and hasn't gone down yet. I do kind of see just a little bit of profits. So I'm just curious to see if that's kind of the nature of this option because we didn't really put in a lot, or if it's just kind of because of the slope at the moment.
Yeah, so it's a sizable position. So half an ETH, which is again controlling $1,000. This is the same size that we use for a lot of our trades. So it's not necessarily the sizing; it is the strategy. If you look, this is a bullish strategy overall. The green is on the right, so you make money if it goes up, but the delta of that position, which is the slope, is kind of small. I think it was started at zero point 0.3, now it's 0.24. So each dollar increase in ETH, you make 24 cents. So and then times even 0.5. So you make like a quarter of what you would have if you hold the position. That's why even though the price could shoot all the way up to 4K, you cap your max loss. You get to a point where there's no dependence. Delta zero, there's no movement. So where this strategy worked for you is that you're earning premium, and again, $10 out of 1,000. So again, 1% in 3 days. This is pretty good. Again, maybe 300% per year if you analyze this. So it is working for you, getting paid. And in addition to that, you do receive some, again, price appreciation. So that's one of those trades where 3 days into a month option, we were bullish. We should still be bullish, even if the price went down a little bit, unless it went to maybe 1,500. There's not much more. It's a trade that works for us. Again, 2% or 1.75% in 3 days may not seem like much, but it's profits. And after 30 days, I mean, it's not as easy, but it could be 50% if it keeps going up again at that rate. So at the end of the day, it's a good trade. It is one that was directional. We can look at who else. You are selling an option. There's a bunch of people, one buyer, so they pay you a bit more. Not much, just 1% or 0.6%. So it's not the money printer that some of these strikes are, but it's still pretty good.
And I'm trying to get more familiarized with in the money, at the money, and out of the money. And so looking at this and where we kind of started and our range, what do I need to look for to understand?
Yeah, so the in the money versus out of the money comes from traditional finance where there's an expiry and a strike. The strike defines the price transition between being in or out, above or below. It's when you are at expiry. If you have a $1,000 call on GameStop, you want it to be above $1,000. At expiry, you want to be in the money. Same thing with puts. Typically in TradFi, because it is very sharp towards the end where it's in and out, you have one price, then this is where you clearly see in the money, out of the money. Currently, the strike is 22.89. The price is above. Technically, are you in the money or out of the money? If you were to think in terms of TradFi,
In the money, because it's above, out of the money.
yeah, above and below change whether it's a put or a call, and maybe the flat part, the part where nothing happens, where it's boring, is typically out of the money. That's one way to recognize this. So you're above, but if you keep going, which side seems the most exciting?
The downward slope looks
Yes.
more exciting, but not for me.
Yeah, so at least in that case, you are out of the money, which is what you want to be when you sell an option. You're out of the money because you're above the price, and if it keeps going, it's going to be more and more boring, but you'll make money as a seller, as a short wall holder. So that's the calls would be flipped, but you just look at the boring side. Boring side is out of the money or out of the interesting action. In the money is when you lose a lot, when it's a put, or when you make a lot, when it's a buy, put, or sell put.
Okay, and so does this for our Panoptic have anything to do with our range as well, or just referred to the strike price?
Yeah, that's why it's a TradFi concept, because we don't have an expiry. We have a strike, yes, but it's continuous, and you may have an out of the money option that is earning you fees, and you can be in the money and not earning fees. So this is why we use now in range and out of range, which is a much more useful predictor of is the position working for you. Is again, it's an LP position in Uniswap. If you're within that bound, you are in range. As a seller, you're getting paid, you're earning fees. You can be out of the money in range, in the money in range. We call this maybe in range is a term that doesn't look at the moneyness, but rather are you in range of the two bounds? And this is what is the first maybe criteria for early management, or let's keep going, or closing, is are you in that range or out? Because if it's out, you earn zero. You technically are stuck with a token that you may not want. Your 100% delta, which is kind of that very straight line, or zero, which is kind of opportunity cost. So out of range should be a clear signal for management, and in range, I mean, depending on the scenarios, should be less of a signal, and you may still keep it on even though it's in the money or moving against you.
Okay, that makes sense.
So as a seller, you want to be in range. In a way, as a buyer, you may love to be out of range, especially if it's in
You
the
don't
money
have
again,
to
and
pay.
where you are exposed to what you want it to be for. I mean, we're gonna do it for a trade, but if you're bearish, you buy a put, and if that put is working for you, you want to see the price to go down. And as the price goes down, you may be like, maybe I'll use a very very narrow one to make it a bit easier, but maybe not. The sorry, yes. As a buyer, you can choose where you want to go. If you're in range, this is maybe less of a positive scenario because you're paying every block. You're paying more and more. The curve will shift down and down and down as fees are collected. So a lot of times you may not find liquidity that is out of range. Here, all of the options are in range, or this one is out of range, but it's out the money as well. This is boring. You're paying nothing, but it may take a large price move to actually get some profit. So if you're just buying options for being bearish, even though you pay nothing for this is boring. There's not much to do. So that case, most of what's available is in range. You start getting paying. You start paying immediately when it starts, and if it does move, maybe the now you have maybe a countdown, or your time is limited, because yes, if the price did move and you're way out here and you're exposed, you're making a short position, you're making a lot of money for the price move. You're bearish, it moves down, you're happy, you're paying nothing because it's out of range. However, the seller on the other side, they may not like it at all. They can force exercise they may force you to close the position. They pay you a fee, 1.2%, but then maybe they do it at a price which is not what you wanted. So as a buyer, being out of range is good, but it's not the best of the scenarios, because there's this kind of force exercise that may mean you get executed at a price you didn't want. So that's the other one to take into account. Sellers want to be in range the whole time. If you're out of range, then don't get paid. It's very, very hard to make an argument. Keep it on. As a buyer, yes, you may tolerate this, but then be mindful you can get exercised against your will, maybe, and get the and here in that case, buying a put means that you're able to sell an option, sell ETH, for instance, for a fixed price. So that ETH will be removed from your account, or if you don't have the ETH, it's going to be kind of deducted from a USDC balance. It's going to be perhaps not what you wanted. So if you close yourself, you can do all of that transaction in one go.
That makes sense. Yeah.
So yeah, a lot of what we see is that the strikes and the sellers are pretty good at managing their positions. Most of what you see here is either barely out of the money or in range, but a lot of what we see is mostly in range. The calls, again, we've seen a few more options, but it's very rare to see deep in the money options not being closed. So yeah, a lot of what we see is within that window. So as a buyer, you're maybe more subjected to the market, and if no one wants to maintain an out of the money option, out of range option, there's nothing for you to buy. So you would still be starting most of the time with an option that's in range. And again, there's a recent activity, but there's a lot of liquidity, almost 100 ETH worth of calls being sold. So if you're bullish ETH, think the price is going to move now, there's a lot of liquidity. Again, $200,000 more or more, depending on how we want to hedge. You could buy this. If the price goes back to 4K, then you're deep in the money and you're making money. If it's still going up, again, maybe you'll buy a call. That's another one that the market may do one thing on one hand, which is sellers, but buyers can now take into the advantage. So this is another one of those positions where you can very quickly get a lot of profit if the price moves suddenly. And buying calls is maybe the best way to get exposed to the upswings. Maybe you're on stables, you're earning 5% on your stables in lending protocols. You don't want to miss out on the gains without necessarily having to sell or buy the asset. You can buy a call, no risk to the downside. only profits on the upside, that's a good way to get more yield, I guess, without the risks.
That makes sense. Yeah.
And maybe since we're here, so ETH USDC, we had one option which was neutral to bearish, neutral to bullish. I'm sorry, neutral to bearish because it was in that tail end, like the 30 delta meant that there's some juice left, but then if it goes up, you quickly reach that plateau, which is fine. So we have that one trade working for us. Have one neutral to bullish trade in your portfolio. We do have a lot of capital left. Would you be creating a new strategy or doubling down or now reverting and saying you're bearish? If you have more capital to deploy, how would you do it?
Yeah, I'm curious to kind of see if put spreads or call spreads might work in this scenario. I guess my initial feeling about ETH is um, it's going to. I have a feeling that it'll hit 3K eventually, but I think before that, it's probably going to go a little bit down again because with this recent Bitcoin moves and then ETH doesn't perform as well, people tend to get kind of angry. And so I think it'll shift ETH back a little bit until it can kind of come out of that again. And so trying to figure out what the best trade for.
Okay, yeah, and maybe as you say, call spreads or spreads is one way to be very capital efficient. You were a bit bearish, so we go to the strategies tab here, go to the bearish trades, call spread is here. Again, it's a defined risk strategy that benefits from the price from a decrease in price. So this is what you have in mind. I did mention there's a lot of call being available to buy. So that's why I would also gravitate towards that. So you can buy that liquidity which is left here and sell option closer to the money. And then you would be kind of now benefiting the most if it goes down. And what's your price target? Maybe you say maybe upside 3K in the monthly. You can have even a weekly time scale. What do you think the downside should be if you test it over the next week or 2 weeks?
What is it at right now?
The current price is 25.64. So
okay, yeah, I think maybe 22, 23.
Okay. So you could have the 22 or 23 be your strike, or you can have this be your lower range where if it does get there, you're kind of the max profit. One thing I want to try out, and this is maybe more advanced, we haven't seen this yet, but now you buy an option and sell another option, both in the monthly timescale. So the width of this call overlaps with the width of this other call. Currently, you're double dipping. You're paying on one hand and getting paid on the other hand. If you're in that range here, you're not paying. So that's kind of one scenario. But we can also change the time scale of both legs. So I'm okay with still buying the monthly because it has a lot of liquidity. But you can change here the time scale and sell the weekly option. So now it changes the payoff a little bit. The curvature is going to be less, but now we can be a bit more precise in how we kind of create that position. And this has the benefit of concentrated liquidity. So you start with buying an option, and if there's overlap with the one you sell, you net pretty much zero. But since you concentrate, you can now earn more, even though there's overlap. So you can imagine that you can have a very, very, could be at a very concentrated region of a lot of profits, a wider region of paying a bit, but because this is much more concentrated, your net positive in your returns.
Okay, that makes a lot of sense. I'm thinking now because I'm trying to take the whole portfolio into consideration. Our other option kind of makes it seem a little pointless here to be paying for an option that we are already basically selling as well.
Yes.
So yeah, I don't.
So I mean, the calls, but you're selling a put, which is one side. You're buying a call. Normally, the call is inherently bullish in a way if you buy a call. But now we relocate this liquidity, make it a bit more tighter range. So again, I've been dabbling with this a little bit. I talked about this on Wednesday, but this is also another kind of good way to harvest yield when the price move is not moving by much. You could imagine that you earn 2 to 3 times more fees than the wide monthly one. So when we earned I don't know, was it $10 or $9 before? You can imagine the same position in range could earn, I don't know, $20, $30. So that's another way. So do you still want to have this payoff, or as you say, since we're defeating maybe the other one, it's fine. But yeah,
Um, yeah, I think I would like to kind of be more capital efficient here. And perhaps would that make more sense to just sell this call instead without buying? Or does the buying kind of impact how much we can, how precise we can be with the call here?
yeah, the buying caps your risk. So if you're wrong a little bit and you say it's going to be bearish, but another fantastic tweet brings all of crypto to 5K, then you would be exposed quite a bit. And here, this caps your max loss. So it's not as if you're paying for protection. Maybe that this is two maybe assumptions: long-term bullish, short-term bearish, or even neutral. You protect, and this is kind of why you pay for that protection. And then you may have a shorter time scale for being neutral or bearish. If it's a naked option and you're wrong, then it's also going to be impacting you way more. So I would say that as a we have to juggle maybe multiple expiries or multiple time scales. But yeah, if you say you're more bearish on the short term, bullish long term, it's a calendar spread or a diagonal. You buy a long dated option, you sell a shorter dated one. It's a very known strategy. And then I would also kind of advocate for this, if that makes sense.
Yeah, that sounds great.
Okay. So the way that you set it up is, again, we don't have so many of these, so we don't preload it, but you do have calendar spreads. You can choose. I would also choose one that is further away, so there's more chance that it's going to be moving. And you have this option that buys a tiny bit of the liquidity available, moves it here, but now we have to change the time scale. Could even do a daily, which is kind of that weird, extremely concentrated bet, but I wouldn't advise for it. But yeah, the weekly one also creates a good region for positive profits, combined with a directionality, which is maybe going below 2200 or 2300 is your max profit. Kind of has this short term bearishness while keeping the long term protection and long term bullishness.
That
Yeah.
sounds good to me, yeah, especially since it's Friday, and we will be
Oh,
off on Monday. So I think this is probably a good
yeah. How do
move
you
that
feel?
we can
We've seen,
execute.
and I'm gonna paste this on YouTube if you're watching or this live or not. You can find that trade on YouTube. It's just as simple as me pasting the URL, and you can trade this if you want. Not if you're in a restricted country. Yeah, I don't know how you feel. We've seen a lot of these wild moves a few weeks ago over the weekend. Um, Mostly because of Trump. I think he calmed down because even traditional markets, they probably feel caught off guard if they have to work, quote unquote, during the weekend. Crypto is 24/7 for sure. So I've seen definitely over the past few weeks, no activity, not as much, a little bit more boring. And that type of trade also could work. And maybe on Monday or Tuesday, we say, yep, it was right. We made a few bucks or not. We can close it. But yeah, I also put a lower probability of a huge move over the weekend, given the.
Yeah, when I was at Consensus, I unfortunately did not listen to, I believe Eric Trump was there speaking. I would have been, yeah, curious to find out what he thinks about crypto, but
I mean, they're pretty deep. I mean, the depending on how you see this, they're very bullish on the space, whether for the long term adoption or some short term games. Who knows? But they are definitely in the know, and they're tremendously helpful to the space. So this is definitely something that's useful. Um, and yeah, maybe they have a stable coin. They do the real things that people need to do for kind of launching a protocol. So yeah, that's very interesting.
do we have time to do another trade in the BTC ETH pool?
Let's do it. Yes, and then I'll skip right away. This one had no BTC ETH or BTC USDC.
BTC ETH.
Okay, yes, we can jump from that directly to ETH BTC. I don't want to know what your assumption is, but yes, the ratio gained a lot. There was a upswing move on ETH price 2 weeks ago. Was not exactly followed by Bitcoin, that's why now the ratio is back up to where it was not too long ago. Very far from earlier this year, but yeah, it did appreciate and kept that. So it's stable at around 0.024. Um, do we have a position? We don't have a position here. So yes, brand new option, brand new strategy. How do you feel about the ratio?
I'm feeling, I think that Bitcoin will outperform ETH. And I'm curious with looking at volatility and the charts that we were just looking at from Volmex, if that can kind of, does that kind of encourage ratio trades as well, or
Oh,
is that just for?
yes. So this is also a bit advanced. But for instance, Tesla, no, maybe there's no other car companies like Tesla, but say I mean, Apple and Microsoft. They are two tech companies, giants in the field. They some of them are hardware or software, but they typically follow one another. If you're exposed to tech stocks, you sell both. When you're bearish, you buy both. Maybe when you're bullish. So there is correlations between the prices. There is correlations between the volatilities of each. One thing that happens a lot in TradFi is that you have earnings or a change of CEO or something that happens that means that two correlated stocks could see a heightened volatility for a while. Earnings is definitely one thing that people play. That's why they all line them up also same week or same month. But that's another way that you now see, aha, Microsoft is higher volatility, Apple is lower. You can now do the same thing. If something is low volatility, do you buy or sell options in that underlying?
Low volatility, you buy options,
Exactly. And then if it's high,
you sell options.
so you can buy a put on the low volatility asset, sell a put on the high volatility asset. You expect the prices to still match, but now you do a pairs trade on vol, or you buy a straddle, sell a straddle if you want to be actually double digging. So that's another advanced topic. You can do the same thing with Apple and Microsoft, for instance, but all the tech stocks. You can do this with Apple and the NASDAQ QQQ index. QQQ has 100 underlyings. This one also has a lot of correlation. Apple can make 5 or 7% of it, but you can still see Apple being high volatility and the index being lower. You can also do these trades. So if you are a retail user, you have no hope of making money this way because this is an arbitrage that is known and out of it, there's no juice left to extract. Uh, you could do a bit more directional and volatility based, which is fine. But then the pure delta neutral, gamma neutral, Vega play that you see for these stocks is squeezed. There's not much left in TradFi. In DeFi, definitely not. As you said, the ETH and USDC, ETH and BTC have this is a pair. You don't have to buy two trades at once. You can just say I buy or I sell, and then that's enough for you to kind of get exposed. So in that case, that's also another one. Actually, I don't know what the volatility. Let's go back to Volmex, but Ethereum. Now, yeah, this is teaching. Like I don't know exactly what I'm going to serve either, but Ethereum might be on the high side of volatility. Wouldn't you
Mhm.
say?
76.
Yeah,
Yeah.
it's kind of the average, but it was much lower earlier this month. It spiked and stayed high. So even if we do like the max the past few weeks, it's near its all-time highs, right? So that's high signal, high volatility signal for ETH. If we look at Bitcoin, hopefully it's not also high, but
What do you
same
think?
timeline ish, might be on the low side, you know? At least it's not near the all-time highs, or if it was, it's been sideways. So it is kind of average to low, whereas ETH is average to high. So, um, actually, yeah, no, I'm the volatility of the BTC ETH price. How do you do this?
Do you divide one by the other?
No, I know, but if the vol of the denominator is higher than the numerator, if it's dollars like if it's dollars, then this has zero volatility, so it's easy to see. It's the underlying that increases.
Mm-hmm.
Now it's the two at the same time. Actually, let's go back to the market. But yeah, the Volmex doesn't show the pair volatility, but since ETH is high, Bitcoin is low, and we're doing ETH per BTC. So ETH being high will mean that the ratio will be high now because BTC is like the cash equivalent. So we're also on the high side. Okay, so that's maybe a good way. But 58% on the ratio, 30th percentile. No, it's low side. Anyway, I would say that yeah.
So we'd have to be
If I look at just the volatility,
bullish. Yeah.
it's an okay market to enter into. 38, it's percentile, but it's skewed, I guess. But the most of it is on the low side. When you're above like 25 to 50%, it is where it gets interesting. It spikes, but then it goes down. So you're not quite often to the extremely high side. So that might be on the trade signal a good time to go in. I would say it's slightly higher than what you would expect. There's some kind of the mean reverting. So maybe you can sell. Maybe we can trade on that ratio of ETH being a bit more volatile. The trades may have a little bit more movement to them. Let's buy.
So we're
Let's
bullish.
Yes.
Bullish on the ratio then.
Oh no, this is volatility plays. So I would say that we should be short volatility. The IV may be a bit higher, and if Bitcoin's IV catches up, I think this is when the trade is realizing itself.
Okay.
So again, them would sell, but the directionality is up to you. You can still be straddle or neutral. This is something we can do as well. But yeah, some strikes there. This one is juicy, about 10% IV. But yeah, what do you feel? Let's say we made this decision to sell after 5 minutes of us trying to figure it out. Are you bullish, bearish, neutral on the ratio? You said you were a bit bearish, right?
Yes, but that's because I believe that Bitcoin outperforms ETH every time. But now looking at ETH volatility, I think it would make sense to, kind of go somewhere a little bit more towards also being a bit bullish,
Okay.
but mostly bearish to
So
neutral.
bearish to neutral, and then I skipped a little bit. I don't want to go over too much, but the trade that we're creating here has risks on both sides, but it's very capital efficient. You're earning fees on both legs. The slope here is slightly negative, which is what you say for bearish trade, but it's the target is a bit lower, but it's not super aggressive. It's very, very smooth. And what I did is that I did choose two strikes which were highly utilized. So people are buying the 0.021 put, people are buying the 0.023 call. We shift the strikes a little bit, but just to double dip and get, yes, the neutral to bearish directionality, but we're earning 14% more on the put, 10% more on the call. That's free money, but that's kind of the more money than if we were just slightly off from that. And I would say that also, maybe I'll do this myself in my professional, but this is I would agree this is likely what's going to happen. The ratio could stay the same or go down since we have other people buying that guides a little bit, but it's not too far off. We still have a lot of overlap between the two. This is also a trade which is smart in terms of strike selection. We're going to those that have been purchased, so we do get more returns because of the buying activity. And it is also not too scary looking. Of course, if it does moves a lot, you can lose. But if it stays within that range, which is what we've seen maybe historically, we start losing a lot at 0.016, and we weren't even there when it was lower. So we are still somewhat covered. So
Good. Yeah, I think this looks like a good position. I would definitely want to trade. And then I'm curious to see as well, maybe if Intern does these trades, to look back at the risk management tab that we have and kind of figure out on Wednesday then where to go from there.
Exactly. So I did paste the second trade on YouTube. Feel free to reach out if you want to see it. We can quickly go. We were at the market space just before. Let's go back there. If you look at the ETH market, and Rosalie's right. No, we have to spy. Okay, let me see. yeah, we were on the ETH market. We have a position open, which is a short put. This position is leveraged, and it is earning some maybe extra fees because you're borrowing, but it has some more risks. And now, okay, we're spying on the portfolio P&L. This is what their position is doing. The risk analysis tab tells you when we get liquidated, and we haven't seen this yet, but yeah, this is the chart. Maybe I'll zoom in. Do you recall what the green and red lines mean?
Yes, green is collateral and red is required. So where they cross, if they do cross, is where you would get liquidated.
And do you see a crossing point?
No.
So we're free, liquidation free, no worries. The price of ETH could go to 0. We lose on the price, but we don't get liquidated. This is perfect when we add this second one, which is a call spread, buying and selling. This should not impact the risks that much because it's a defined risk strategy, and we know the max loss. So it may shift the required up by a little bit, but we never are exposed where there's infinite loss if we were to just sell a call. So I would expect that we may not even have liquidations if we were to look at this after the new position is minted. But yeah, that case, both of those are fairly profitable. We're definitely bullish overall because we have some ETH deposits. If we look at this is just the put that we're creating, but including the deposits, we do have a good balance of ETH. So sometimes without even knowing, you are inherently bullish. So do remember to look at the include deposits tab for your portfolios that you see the total exposure, not just your positions, but also the deposits that contribute. And we may even have more value in the ETH side. So that's going to be something that the, more on the ETH, which is fine. But yeah, that's something to consider. So I think that's it. Any other maybe question or things you want to look at before we adjourn?
No, I'm curious. Yeah, just kind of to see how the weekend goes. Hopefully nothing too crazy. I doubt Bitcoin will kind of keep going up as much, but hopefully it'll kind of enter a new range and hit 200K eventually.
Maybe, yeah. No, Pizza Day is a sell the news type of event. Everyone knows that. So, all right. So that's it for now. Thanks a lot, everyone. Let's do some of the outro music. But this was me and Rosalie. Stop losing, start trading. Nothing we say. Bye. Right out. We had a trading competition on Base, which was very fun. We're on layer 2s, mainnet. If you're sensitive to gas, go on Unichannel Base. There's liquidity there. You can try it out. Otherwise, have a good weekend. We may not do Monday because of Memorial Day, but otherwise, we'll do it next Wednesday.
Awesome.